European markets are turning lower again after a positive burst this morning. Markets have not seen this much volatility in 4 years. Jim O'Neill is chairman of Goldman Sachs Asset Management and joins me on the line now. Jim, it seems to be volatility. That is the key word right now. Is it emotion driving these markets, or is it the fundamentals?
Well, I think it's a bit of both. The emotion certainly was pretty powerful yesterday, and it just got stronger as the day wore on into the New York close. And people are worried about the simultaneous challenges in both Europe and the US. And rather like occasional moments in the past 4 years, people are assuming that the world only exists of these two regions, which is why people are so scared. I'm not sure if it's the right thing, but certainly how people are worrying about things in the past few days, that's for sure.
Yeah, well, Jim, you've been there, done that, got the T-shirt. When you look at this crisis and put it into some sort of context for us, just how much danger do you think we really are in at the moment?
Well, on Friday, I was very worried when I looked at what was happening because I wasn't 100% sure the European policymakers would react in the way that they did. But the ECB, bless the cotton socks, yet again had to do a bit of a U-turn, but I think it was one that was highly necessary. In terms of real comparisons with '08 and the Lehman event, an inability for Italy to be funded and Italy getting into the same kind of problems as Greece would be a major problem. So the fact that they reversed policy and supported Italian and Spanish bonds yesterday was a really positive bonus. And as your commentary said earlier, Italian yields are lower again this morning. So that should be good news. But I think the emotion surrounding the prestige of the S&P downgrade is obviously taking its own toll, and it seems to have contributed to renewed fears about US financials as well. So the Fed has to do something to stop that. I'm not quite sure if QE3 is the right thing, but they certainly have to do something to stop that.
Well, we've just seen pictures of Jean-Claude Trichet. He was reiterating once again that his policy for the ECB remains in place. Jim, do you think the ECB has the will and indeed the firepower to see this through before a new bailout fund is ratified?
Well, that's obviously the key thing here. I mean, the truth of the matter is it's been the smart policy to fade whatever the ECB or other European policymakers have announced in the past 15 months within a few days of them doing it. This time around, they have to, I hope, have learned to have had a more sophisticated thought process about how to cope with this bond market challenge through the month, because it does seem to me that the ECB is the only one that can keep the European market supported until the new stability fund is ratified, and it's very important that they do.
What about the Fed later today, Jim? What are you expecting them? Are you expecting some sort of signal that some kind of QE3 will indeed take place?
Well, I think it's a little bit premature for that. I mean, yesterday could have changed things because it was a pretty scary day on Wall Street, as we all know. But I think, and contrary to what your interview with Ken had, inflation has got back up to where the Fed is targeting this year, and I think the Fed will be slightly concerned about inflation having picked up more than they thought, and they will probably think that the economy is in the process of bouncing a little bit. Recent auto sales data, for example, has been stronger, so I'm not sure the Fed's going to be rushing to QE3 at this meeting, but what I do think is the statement will acknowledge the recent issues, and they will make it clear that they intend to keep financial conditions as accommodative as possible. What I suspect they are probably doing is exploring ways to have more specific measures to support the areas of real bottlenecks of the markets and the economy, rather than quickly embark on QE3, where it's not without its own controversies, of course. And I find myself increasingly thinking in the context of a global sense, the biggest positive thing that's really necessary is for inflation to start easing in the growth market world, in China, the other BRICS and beyond. And of course, with what's happened in commodity prices, that should be the case. And given that these places are the export markets for the future for Europe and the US to get out of their challenges, that's a big bonus. So the Fed doesn't want to go rushing to QE3 and do things that could lead to a big drop in the dollar and a further big recovery of commodity prices, because that wouldn't really help them, in my opinion.
No, Jim, at the moment it is all about growth. Just how is the turmoil that we're seeing and the volatility we're seeing right around the world actually affecting the prospects for global growth?
Well, obviously it's keeping people in the M&A world completely quiet, which is usually a troubling sign, because the M&A trends are a reasonable indicator of business confidence. And one will hope that that is going to be temporary. It seems clear that through the rest of this month, with it being August anyhow, business people are going to be watching carefully from the beach if they're on and if they're still there, and be pretty nervous about things. But come September, hopefully with this fund ratified and with some evidence that the US economy might have picked up a bit more, and then most importantly, because it seems to me yet again we're seeing signs here of Western participants and observers not really recognizing how the world is evolving. Most importantly, we might have seen the peak in Chinese inflation this morning. And if Chinese inflation goes back down to 5% towards the end of the year, that is a major bonus for not just Chinese growth, but also global growth.
Jim O'Neill, Chairman of Goldman Sachs Asset Management, thank you very much indeed for joining us on Bloomberg once again and giving us your insight and just what's going on around the globe.